the market seems to be celebrating and at all-time high based on AI or opium. But some of the most popular stocks are still dangerously overvalued and could be cut in half by 2027. So these are not penny stocks, these are the most popular stocks on the market and who have actually huge run-up based on this AI trend. I'm Eddie for Mine, and in this video we are going to deep dive into 5 of these popular stocks which are dangerously overvalued and could be cut in half by 2027, especially if the market environment and the optimisms around AI disappears. So let's get started. The first one on the list is, I think you guessed, it's Palantir. So yes, Palantir, I think, is the real epitome of the overvalued stocks in this context of AI boom and AI bubble. And definitely, I think that Palantir is at risk of being cut in half even in 2025. So today the stock is trading at 184. So it means that like a comeback to the 90s would actually be cutting the stock in half, and it wouldn't be actually surprising for anybody. So the stock is currently trading at more than 600 times price to earnings ratio, more than 132 times price to sales. And even if we look at the PEG ratio, so like a lot of people, they are looking at the PEG ratio and saying like, okay, so it should be around 1 or 2, but for Palantir, it's about 5. And so this really shows like the overvaluation for Palantir is something from another world. And I think that thinking that this is going to continue going forward for like years and years, I think this is really something that is a bit delusional in a sense. And I really think that Palantir is going to actually be cut in half, at least in the next years. Because, well, the narrative around AI is going to evolve, and there are going to be some times where pessimism is going to actually enter the market. So it could be around Nvidia earnings, it could be around like tariffs, for example, but definitely what we can expect is that like the narrative around AI is not going to be linear and is not going to be always positive. So what does it mean for Palantir? It means that when the AI narrative shifts, it's going to be very difficult for Palantir to really justify its current valuation, and it could be cut in half, so meaning like a minus 50% drop from the highs today of 184. And so I think this wouldn't surprise anybody, and even if it's cut in half, it will still be very overvalued. I mean, like 300 P ratio, or like if we look at the forward P ratio, I think it's maybe a better metric to look at it. It will still be above like 100. And so I think it's very hard to justify investing in Palantir at this level today. We have done another video on this. I think that any investor should stay away from investing in Palantir, even if the stock is continuing to going up today, because long-term wise, it's going to be very difficult for Palantir to justify its current valuation. Next on the list is Nvidia. Indeed, Nvidia is actually a very solid company, one of the best company in the world, even, or if not the best company in the world, because now they have the biggest market cap in the market. So at more than $180 per share, actually Nvidia has had an incredible run after Liberation Day, so almost double. And what we can see actually also from AMD is that Nvidia is definitely a leader in terms of AI computing, and I don't think it's going to change. And the only thing is that for Nvidia, we are seeing like an overvaluation and also like huge expectation. I think that more than the valuation, that's the expectation, which is actually pretty high, and which makes me think that there's a possibility for Nvidia to actually be cut in half until 2027. Especially that we are seeing some headwinds also for Nvidia coming from China and the probe on their H20. Also, we are seeing that SMCI getting sued because they were like selling Nvidia chips to China through Malaysia. So there are a lot of kind of breadcrumbs that are showing us that Nvidia may have some troubles going forward. And if we are seeing some troubles for Nvidia in the next months or even the next year, there's actually pretty significant possibility that Nvidia may lose 50% of its market cap. It will still be a very huge company with a lot of expectations, but I mean, a decrease of 50% for Nvidia may not be the end of the world, and it can be still very realistic. On top of that, what we are seeing is that a lot of expectation in terms of capex from the tech giants, but also a lot of willingness to actually diversify outside of Nvidia. And so if this accelerates, or if we have news that this type of chips by, for example, Google or like Amazon, for example, start to actually gain traction, So there might be a bear case a little bit for Nvidia. On top of that, what we can also expect is AMD to also up its game and become a real competitor for Nvidia, especially on the inference side. We have seen the adoption of the MI300, the MI400 very largely by OpenAI and by Meta, for example. And so what we can expect is that possibly the market might not be as optimistic on Nvidia going forward. I think this is a real possibility that any investor should actually take into account. And when it's going to materialize, or when we are going to see a reduction in terms of capex from the big tech giants, well, this could signal for Nvidia actually a huge decrease in the share price given the valuation that they have today and the expectations that are already baked into the stocks. So far, Nvidia has lived up to the expectations, but given the different accounting tricks that they are doing and given the setup that they are in, I think that it is reasonable for any investor to be pretty prudent with Nvidia today. Next one on the list is Tesla. Yes, Tesla is trading above $300 at the moment, but what we have seen from the CAS business is actually there is a lot of competition for Tesla, and that today the whole stock is basically relying on the hope of robotaxi and robotics. And I think that basically the biggest risk for Tesla, which is going to cause like at least a drop to the 200s or even to the $150 for Tesla, is that people do not realize how much competition Tesla is going to have in both the robotaxi business and also in the robotics business. So first, in terms of car business, so what we are seeing is that they are losing in China, they are losing in Europe, they are losing in Japan. So outside of the US is becoming a very tough environment for Tesla to actually grow their EV business. And what we are seeing definitely is with the loss in terms of scales, a compression of the margin, and with the heightened competition, it's going to be difficult for Tesla to actually price their vehicles right enough to actually keep the margin that they had at the beginning and which actually entitled them to such valuation a few years ago. But now, well, the car business I think today is overvalued, definitely. And so if people realize that the robotics and the robotaxi business is not going to materialize significantly, the stock could actually crater to $150. So today we had the news that the dojo is going to be cancelled for Tesla, which also showed that there are some difficulties in terms of AI for Tesla. But outside of that, what I want to point out is that their robotaxi business is not actually fully operational at the moment. And so much margin has been baked into this business that people, they will be disappointed going forward when this money and this profit is not going to materialize significantly. So what we can see today is that there is competition. Competition first from Google with Waymo, and what we can see is that Waymo is actually ahead of Tesla in terms of robotaxi and autonomous driving. Definitely, I think that no one can really contest that. And the fact that Tesla is going to dominate this industry because of some advantage, I think it's a bit delusional from a lot of different people. And what we are going to see is that definitely this robotaxi business is not going to be as profitable and does not warrant such a valuation for Tesla. Definitely not a $1 trillion business for Tesla. And then if we go to the robotics part, so I think that here it will be the same problem as for electric vehicles, because on the China side, I think Unitree and other AI startups in China, well, they cover the market. I think it's over for Tesla. Optimus is never going to go to China, ever. Then if we look at the US, like we have other startups, and for example, Amazon already has their own robots, and they're going to develop and they're going to continue and to invest more and more in terms of robotics. And when we can compare the amount of capex that Amazon can actually dedicate to this robotics business compared to Tesla, I think that there's going to be a huge gap between big tech giants like Amazon and Tesla. So definitely, I think that on the robotics business, I think a lot of people think that Optimus is going to be the winner take all in this market. And I think that in the next months and the next years, like people are going to realize that it's going to be very difficult for Tesla, because with the car business, the robotaxi business, energy business, and the robotics business, they're all facing pretty strong competition, because today everybody is going all in terms of software AI and physical AI. So next one on the list is MicroStrategy. So why MicroStrategy could be cut in half by 2027? So one of the key reasons is because it's a leveraged version of Bitcoin. And so Bitcoin is very volatile, and Bitcoin can definitely like lose 20 or 30% in the next year or the next 2 years And how it will reflect on MicroStrategy? Well, it will reflect very badly because MicroStrategy is going to actually decrease on a leverage basis, so much more than Bitcoin. And on top of that, so what we have seen is that people are leveraging MicroStrategy because of its volatility. So a lot of traders, they are benefiting from the fact that MicroStrategy is actually decreasing minus 50% as well, because they are running a lot of different strategies based on their convertible debt. And so this is in their interest that MicroStrategy goes up and MicroStrategy goes down, not that MicroStrategy goes up all the time. So that's why that when you are kind of lost a little bit in terms of delta. So like they are playing a different game, meaning that they are buying the volatility and they are constructing option plays which actually benefit when the stock is actually going up and down. And so that's why that we can expect MicroStrategy to retrace by 50% given the level it is today. And we can add also Misty, which is going to suffer as well if this happens. And definitely every treasury Bitcoin play are going to suffer if Bitcoin actually decreases quite rapidly. So that's why I think that MicroStrategy, because it's a popular name, is actually quite a good candidate for a stock that could be cut in half by 2027. And I really think that that is going to happen because, well, we have cycles in Bitcoin, we have cycles in crypto, and definitely this is going to happen, that crypto is going to go down a little bit for a lot of different reasons. And in this case, MicroStrategy is going to suffer. Same for all the other plays like MetaPlanet, for example. And what we are going to see is that because some people need the volatility, it will be actually enhanced and increased. And we can definitely see like a retracement by more than 50% for MicroStrategy. Then another stock that is, I think, definitely going to be cut in half by 2027, it is Softbank Group. Why? Because it has run up based on a lot of lies and a lot of hopes in terms of AI, especially around this investment with OpenAI and around Stargate. So what we can definitely infer is that, well, there are so many tricks and there are so many unclear things in terms of setup for Softbank Group that when the AI bubble is going to slow down a little bit, like we are going to see a lot of pressure on Softbank because Softbank is highly leveraged. They have very low cash balance at the moment, and they have actually used a lot of different schemes to actually try to find the money and to try to continue their operation in terms of investment. The fact that Masayoshi Son is actually coming back with a lot of investment and a lot of talk about AI really gives me like a very insecure feeling about the situation around AI, and the fact that when he's coming in, like this is definitely a bubble and we all know that it's not going to end very well. So I think that's the same situation as happened in 2021, and we're going to see the same type of result in 2026 and 2027 for SoftBank Group, meaning that they are going to be kind of a disillusionment period for SoftBank, given that they are going to invest in anything AI and they're going to make a lot of mistakes. And regarding the amount of money that they are promising for the Stargate project and other building of data centers, I think it's going to be very difficult to justify the type of ROIs. And frankly, like it's very hard to understand like what investors are seeing in SoftBank Group, except the fact that they are investing in OpenAI through a different and very complex scheme. And so even their investment in OpenAI today is actually quite obscure, and the valuation of OpenAI is maybe a bit too overvalued, and that we are going to see going forward that actually everything that people are seeing within SoftBank is actually going to be just an illusion. So the start of that is that we have been able to see in the most recent financial disclosure that the SoftBank Vision Fund has reduced their investment in OpenAI by $1 billion to $7.5 billion. So, well, if it was such a great investment, I think that they would have increased it and they would invest even more in terms of target project. But the reality is, I think, a little bit different. And what we are going to see for SoftBank is that in a few years, people are going to realize as well that SoftBank is widely overvalued and that the value that they have in ARM and in OpenAI is definitely not there. So here you go. So these 5 stocks, Palantir, Nvidia, Tesla, MicroStrategy, and SoftBank have all been really pushed up by the market very recently and are today very dangerously overvalued. And they might be cut in half and still be wildly overvalued. And so that's why you should be careful with this name at the moment. There were very good opportunity before, but today this is very different. So basically, I would suggest that you have much more due diligence on this name if you plan to buy them, because I think that today these are not opportunities at all. So that's it for today. I really hope that it can give you a little bit more information and context about these 5 very overvalued stocks and why it would be wise not to put too much money into them. And so if you're interested in other analysis like this one, so please check my other videos, please subscribe, and I see you in another one. Bye.